Hey, I'm JC with FX Insights at CIS Trading, the creator and developer of TradingView Toolkit and Thinkorswim Toolkit. In focus, this week we are looking at market depth, which has come off of peak delta for the yield curve inversion swap. So we've had market go into peak delta as the last bond contract ended. As the new bond contract in April was issued, we've seen that strength peak and then market depth come off in most of the foreign exchange markets. So we went through a period where we saw a lot of delta. We are now at peak low delta. We're looking here in focus at the US dollar index. This is a TradingView.com specific US dollar index, the DXY. We're trading currently at the target low, and we're looking for a bounce here back higher. What we see this week is a move from the peak low delta back to a moderate normal delta range of about 1%. So we're looking to see the dollar get to where it's moving in a range of about 1% potentially over the next week or two. So when we're looking at this, we could see the dollar index, the top CISGG Pro Action is the market depth, and you can see how that market depth has come off down to a peak low, and we expect to see that to return up to a moderate mid-range up there of around 0.9 to 1% back in the range of the dollar. Next up, pound US dollar. This is our trading now segment for FX Insights, looking at what we're trading now. Looking at the pound US dollar, we have a stop up at this top where we've reached the target high, and we expect to see this pound US dollar on Prometrics divergence to come off. You can see the slight signs of a potential reversal coming over the next week. So we expect to see 200 pip range to the downside, at least on this pound US dollar trade. Australian dollar, US dollar. So looking at all that used, we see the same kind of configuration with this dollar trade where we're at the target high, all that used, and we can see signs in the Prometrics of a potential reversal coming back short. We do have a target on that of about 60.50 on the buy side. Nosedive used, Kiwi US dollar. Looking at the Kiwi US dollar, it's been trading very similarly to the pound US dollar, except it's actually outperformed on metrics relative to the pound US dollar. So looking at the Kiwi US dollar, we do show signs of a Prometrics reversal coming. We're at the high, the target high level. We're at peak low market depth. So what we expect to see is some peak depth back to a moderate range of about 100 pips to the downside minimally, and we have a target of 59.40 nosedive US dollar. Looking at the euro, Great British pound, you're a good bump. We're coming off of a target low where we came down to a series of target lows and have consolidated there in that range. We do have a Gatsby reversal higher. I have an 88.30 target on that trade. Now we might run up to an 88.60 range, but I do believe we get about an 88.30 consolidation target on that trade. We are trading again at peak low market depth. If you look at the top study, CISGG Pro Action, you can see how the market depth has come off over the last couple of weeks from the bond swap contract to the yield curve inversion. So what we expect to see is a range up and then back down toward the middle on this euro Great British pound to about 88.30. Looking at about 100 pip trade in total range, but potentially only holding about 60% to 70% of that total range in price action. But there is a Gatsby reversal higher on that trade. Could see a move over time back up to the 90.35 range. But right now we're showing about an 88.30 target on your good bump coming week. Next, we're looking at Great British Pound Australian Dollar. Looking at the pound out trade, we have a long-term short on this position with a diamond target low down around 178. All right, so we have a 178 target low with a long-term diamond pattern short at 178. So pound out trade, we're looking short. You can see that we're at peak low on our pro action market depth. We're also at a peak low on our pro metrics. We do have some room to the downside here, pound out trade, before we see a bounce. There's an underlying price action strength reversal potentially in this trade over the next couple of trading sessions. So what we expect to see early in the week, possibly pound out, is a peak low and then maybe a little bit of comeback back to consolidation to the 97 to 98 range and see what it holds. But right now we're looking peak low, reversal, pound out trade, down just a little bit lower than where we are, probably to the 94, maybe potentially all the way down to the 93, and then a sharp bounce back up to about 60%. So when we're looking at that euro pound trade, we see that euro pound trade, your good bump, we see a move higher and then consolidation back down to a 60% total range. We see the inversion of that with pound out, a peak low and then a consolidation back up to about a 60% or better hold. So what we see between the two, your good bump and pound out, when you're looking at the euro this week, expect to see the euro stronger on distribution, not necessarily against the US dollar, considering the dollar reversal potential, but the euro, especially in distribution, probably stronger than the pound on leverage. And finally, we have trading now US dollar, Turkish new lira. Looking at the US dollar, Turkish new lira, the trades that we're covering are impact trades. So these are trades that we think are the trades that are going to impact the total market moves. There's going to be opportunities, for example, Australian dollar, New Zealand dollar, euro Canadian dollar, euro Australian dollar. You're going to have opportunities euro yen. You're going to have opportunities probably pound yen, potentially short. There's going to be different opportunities in the market, but our big influence trades are the ones that we're covering from pound US dollar to the Australian US dollar, your good bump, dollar try trade, and then we'll have one final trade here in just 1 second. So looking at the dollar try trade, we have a key situation in this trade with a 5.5 weekly diamond. There's a 5.5 weekly diamond short below 5.5. We also, or sorry, that's a monthly diamond. A monthly diamond 5.5 short, and we're trading up here around 6-7. We also have a weekly diamond short down around 2.8. We really expect to see strong dollar try short, a very, very sharp extended move to the downside on this dollar try trade. We do have a diamond top on the daily. You can see inside bar, outside bar, inside bar. We've come off a peak target high move on this dollar try trade, and you can look at our metrics there and you can see exactly where we are on this trade, and we do expect to see an extended period of time dollar try short. Finally, one of my favorite trades, especially for new traders and traders just getting involved in the Forex market, is the nosedive chef, the Kiwi Swiss franc trade. Again, all of the trades that we're covering in this segment trading now are what we expect to be the impact trades in the market. So how these trades move over the coming couple of weeks is going to really drive the rest of the distribution in the Forex market. So looking at nosedive chef, we actually see a move higher on this trade. We could see a short-term small low delta reversal, but we expect all the delta in this trade to be to the upside. There's a lot of significant technical bullish reasons for this. In our pro trading chart, we show a target high of around 59.81 on our target high. I have a 60 target on this, but I do see a move NZDCHF all the way up above 62 and potentially all the way up to 65 Kiwi Swiss franc. You can see where we are on our metrics there. We've come off a little bit of a bullish cycle. Might see a short-term reversal, but we do think that those metrics do continue higher. NZDCHF. Once again, I'm JC, the author and instructor of Pro Trading. This is our analysis for the coming week, mid-April, looking at the Forex market in focus. Have a great week.